Welcome back. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Snesh as well. But let's move on. And actually, we have my colleague, Anurag, who's actually managing to speak to Umesh Revankar, who is at Shriram Finance, and talking about a lot of stuff in terms of HFCs. What are the regulations shaping up like? Let's go across and listen in.
Umesh Revankar, Executive Vice Chairman, Shriram Finance. Thank you so much for talking to ET now, sir. Just want to understand how is the credit situation going on. We have seen that that in auto the inventory pile-up is happening. So it is reflecting on your loan disbursements also.
Right now, I don't see any shortage of demand. There is enough credit demand. I think in passenger vehicle, we do see the report saying that newspaper report there is a pile up of inventory. But if you go and ask in auto showroom, you see that there is a waiting period. So maybe for certain model there is a waiting period. Certain model is not moving fast. There could be some reason. So we are not very sure. But there is no slowdown as of now for credit demand in auto.
Okay. And sir, now we are entering into the festive season starting after the Raksha Bandhan till the Shera Diwali. So you think that demand will pick up more?
Definitely. The demand will be very high during the, it is a typical between Dasara to the Diwali time. There is a high sales in two-wheelers because the demand comes from the rural market. Once the harvest goes to the market, people get the cash. People do buy new vehicles, and the most of the demand for the vehicles comes from the rural market for the base model cars and for the two-wheelers. And to some extent, others also, urban market also will like to buy something in these festive period. So overall, the demand will be much better at that time.
So you want to say that contrary to all the reports, your own data is suggesting that at the rural level also, after the harvest and all, the demand is there and it's picking up only.
Definitely. See, it all depends upon when they get the harvest and when they get the cash. Because everybody would like to see some cash in their hands. And then they would like to invest or spend money depending upon how they would like to do it. And this time, since the monsoon is much better than last year, I expect that agriculture output will be better, and MSP being reasonably good. I think there will be more cash with the rural customers.
And sir, my second last question, sir, what is the present status of your stake sale in the housing finance business? You have received the CCI approval. By when this transition will get concluded?
The housing finance, I think it is with the regulator, and as and when it comes, approval comes, they will do it. We are targeting by this year end, by December end, hopefully we'll be able to complete the formalities.
And sir, now going ahead, your complete focus area would be the vehicle finance only?
Yeah, see, our 70% of our book is vehicle finance. If you add two-wheeler, totally 67 plus 7%, around 74% is the vehicles. So two-wheeler to all vehicles. And if you add construction equipment, another 3 or 4%. So we are basically lending to assets which earns by itself and pay for itself. That's how the business model is. So our focus will be mostly on that.
Yes, sir.
Okay, surely interesting comments that are coming in from the management of Shriram Finance. They are seeing a bit of a better move coming in, at least on the rural front. Housing finance side, December end is what they're talking about in terms of completing all the regulations there. But yes, that's about Shriram Finance. But let's move on and talk about other stocks that are in focus today. We have HDFC Life, SBI Life, those life insurance companies. They are buzzing in trade. We did have the data point that came in for life insurance. And when you look at it for July, the premium for life insurance, that increased by around 14%. Other than that, they saw a strong performance specifically coming in for HDFC in July. SBI Life was a bit of a subduedness because they had a strong base last time. So let's not forget that. And LIC on the other hand, the retail APE, that remained, remained flat in the month of July. Overall, life insurance industry retail APE grew by 24%. So good data points at least seem like it on the first card. HDFC Life specifically has seen a growth. SBI Life, given that the high base, it has seen a bit of a fall, but that's what we're keeping an eye out on. Both the stocks buzzing in trade today. Absolutely.
absolutely both stocks passing in trade, but let's keep it going. Talk about Dhanuka Agritech in today's trading session, and the stock is in focus because they've announced a buyback of 5 lakh fully paid up equity shares worth 100 crores through a tender offer process, and this has been announced today on the exchanges. The buyback involves the purchase of 5 lakh equity shares with a face value of 2 rupees each at a price of 2,000 rupees per share. The total consideration for the buyback amounts to 100 crore, and the buyback offer will open tomorrow and will close on the 28th of August. So watch out for this stock, and well, on the back of this buyback news that the company has informed the exchanges, 2.2% higher is where the stock is.
Okay, surely keeping an eye out on that one. Let's move on and talk about Chambal Fertilizers. But before that, let me welcome on board Ashish Kyal, founder and CEO at Wave Strategy Advisors, joining in with us. And Ashish, good afternoon. Chambal Fertilizers is the stock that you've picked out for us today. When you're looking at it today, surely seeing a strong move. But last 1 year, also we've seen a very strong move. There's no doubt about it, right? 100% return, 1 year, not a bad time. What is the outlook now for Chambal Fertilizers? Are you still expecting an up move, or should one who's holding it start booking profits?
Hi, afternoon to you and all the viewers. If you look at Chambal Fertilizer, the stock has been consolidating over past few weeks, and it showed a very strong bullish candle in today's session, and looks like we should see a strong breakout from over here, and once the 540 level is crossed, I'm expecting it will move towards at least 580 level. So there is good upside potential for Chambal Fertilizer. The target is 580, and on the downside one can maintain a support of around 507 level, which is the 20 days and the 10 days moving average confluence.
Okay, surely keeping an eye out on those levels over there for Chambal Fertilizers. Let's move on. Marksans Pharma, that's the one we're talking about as well. We're seeing that the stock actually managed to touch a 52-week high today, Snehi. Yes, at one point of time it was up almost 1%. Given that, but you know that touching the 52-week high was important. When you're looking at it, why the stock price actually surged, what it announced is that its wholly owned subsidiary has actually secured a marketing authorization from Medicines and Healthcare Products Regulatory Agency for 3 products which are there, some capsules, and these products are something that help in solving the problems related and treating depression, obsessive compulsive disorders, so that's OCD, and some other eating disorders as well as panic attacks. So on the back of that, Marksans Pharma managed to hold on to gains of 1% at one point of time, but still holding on to gains of 0.3% in trades today.
Let's also talk about JSW Infra now, and Jinay, you've picked out that stock for us. Tell our viewers why that is, and I believe it's on the back of a brokerage note.
Well, as it is focused on the back of brokerage note, we have a note by Motilal Oswal who have maintaining their buy rating with a target price of rupees 390. Now what they like is the expanding port capacity of JSW Infrastructure along with increasing footprint across India in logistics services. Also, they are building a pan-India logistics network with a focus on last mile connectivity, for which they also recently acquired Navkar Corporation. Now, apart from this, what they also like is diversified customer base along with cargo base that JSW Infra has to offer. Now, if you talk about company, that it has said that they are aiming to pursue organic and inorganic growth opportunities, they're strengthening their market presence and expanding its capacity to 400 million tons by 2030 from their current capacity of 170 million tons. Now, Motilal Oswal is estimating a 15% volume growth CAGR and 22% revenue CAGR from FY 2024 to FY 26, and they're valuing the company at 25 times of FY 26 EV is to EBITDA multiple, and on the back of that, JSW Infra is in focus.
Okay, that is JSW Infra. Let's move on and talk about QSR name, Jubilant FoodWorks actually, and what is the word coming in for Jubilant FoodWorks overall? Now, Ashish, where do you see it moving from here on? What is the target that you're keeping an eye out on for Jubilant Food?
See, Jubilant FoodWorks has given decent returns. I think more than 35-36% return has already given over the past 6 months, and we can clearly see the stock is showing a strong bullish candle formation even today. It found good support around its 10 days average, bouncing back on the upside. The volumes are picking up along with the up move, which is suggesting that the up move is healthy, and we can expect a target of around 720 on the upside. And on the downside, the support can be near today's low, which is around 629 levels.
Alright, so those are the levels coming in for Jubilant Food, but well, let's go across and listen into a prominent voice, because during an event for the report launch on net impact of e-commerce on employment and consumer welfare in India, the Union Commerce Minister Piyush Goyal said that the growth of e-commerce firms in the country is a matter of concern. Let's go across and listen into what he had to say and what's the rationale behind his choice of words.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. I don't deny that e-commerce has a role, but we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country?
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. More stocks after the break.
Hi there, welcome back. So watching Market Fatafat on ETA now. Let's continue talking about all the stocks that are in the limelight today, and let's talk about Cyient as well as Cyient DLM. And this is also on the back of a block deal that we did see happening earlier in the day today. Around 1.2 crore shares of Cyient DLM changed hands at a floor price of 766 rupees per share, taking the overall transaction value to 883.2 crore. These are the details that we have as of now. These are all provisional details. As much as 14.5% stake in Cyient DLM was sold through a block deal with its promoter and information technology firm Cyient being the likely seller in the transaction. Cyient also had earlier revealed plans to use the proceeds from the stake sale for capital needs and debt repayment, which is why the street is penciling in that Cyient could be the likely seller. But well, yes, after market hours, we'll be getting all the finer details about this block deal. But on the back of that, you can see Cyient Limited, which is expected to be the seller, 3.5% higher, and Cyient DLM, the stock that has traded hands today, almost 2% lower in today's trade.
Okay, let's move on. Talk about the next stock from the pharma side. Again, we have Indoco Remedies that's in focus. Just a short while ago, the company announced they've gotten a US FDA approval for the generic Lusmira tablets. Now, Indoco Limited furthermore said that this is a competitive generic therapy designation of the US FDA, and it's being approved, being the first approved generic. They're going to be eligible for that 180 days of CGT exclusivity that they have for this drug. So yes, they will be for that 180 period of exclusivity which they'll have. The exclusivity will begin from the date of the first commercial marketing of the product of Indoco intends to launch the product. So surely keeping an eye out on this one, because according to the data points that are coming in as well, the IQVIA health data that shows that the sale of this product is approximately around $15.59 million with an expected growth rate of 38%. So yes, that advantage is something that they do have as well. Indoco Remedies in focus, up 5% in trade.
Alright, let's shift focus from pharma and talk about Crompton Greaves now. Ashish, you've picked out this stock on the technicals for us. Tell us what patterns are you spotting on the chart and what's your outlook when it comes to this stock?
Crompton Greaves have shown a very strong run-up over the past 1 year, and if you look at the entire chart pattern right now, we can clearly see it is breaking above the previous high and reaching that 52-week high level. So looks like that the uptrend can resume from here towards around 520 levels on the upside, and one can maintain a stop loss of around 450 and buy at the current levels as well.
Let's move on. Talk about next two stocks that you picked out for us, Jinay. That's IGL as well as MGL. Why are both these stocks in focus?
Well, yes, so we had a report by Antique on oil and gas city distribution, where for IGL they are maintaining the hold rating with the target price of rupees 533. For IGL, what they see as 3 vehicles, Dent adoption and EV bus adoption remains strong. Also, CNG penetration reached at record low levels in July, with the market share being taken away by EV, which will be something one should be cautious on the front of IGL. Now, for taxis, CNG adoption rate has increased by 80%, is what is positive for IGL, is what Antique believes. Also, EV registration have seen a steep decline to 53 vehicles versus 217 vehicles month-on-month basis, is what reported. Now, for MGL, if we talk about, they are maintaining their hold rating with a target price of rupees 533 again. What they believe on MGL is that two-wheeler CNG registration has started. They have witnessed 121 CNG two-wheelers being registered after the launch of first ever CNG bike by Bajaj in July. They are estimating a 10% EPS growth in FY 2027 and values MGL at 14 times of its FY 27 PE multiple. And on the back of this, both of the stocks are in focus. If you look at IGL right now, it's trading flat, but MGL is holding on to gains of over 1%.
Alright, so that's the moves coming in on IGL as well as MGL, but let's also hear in MK Surana, former CMD of HPCL. He said that the OMCs have successfully navigated the changes in crude price. Remember, we have been seeing some volatility coming in crude prices recently due to a bunch of factors. Let's go across and listen into what he had to say.
Over last 3 years, I think the market has seen the robustness and the resilience of these companies to navigate through various challenges which comes, whether it was COVID, whether at the high and low food prices, whether very high cracks and very low cracks also. So I think that overall the setup is good, and the possibilities of the rate cuts and the good monsoon and the festive season coming in, the demand growth also should be good, at least in the Indian market. I think the July growth was almost more than 7% with MS and HSD. MS was almost 10%, LPG was also 10%. So overall it looks good. So we need to see on an integrated margins, because over a period we have seen that the prices had been kept constant, and there are reasons for why it should be. We can always debate on whether it should be or it should not be, whether it should be completely free, whether it should not be. But I think on the integrated basis, it looks reasonable right now.
Okay, let's move on to the next stock. And Ashish, you've picked out Granules for us. When you're looking at it in the last 6 months, it's moved up almost 50-60% in trade. What is the word on Granules? At 689, is it still a buy?
Yes, it's better to buy the stocks that are outperforming in the current market, and we can clearly see the mid-cap, small-cap space is buzzing around. And Granules have been showing a strong impulsive rise from a Lotto perspective. It's a third wave on the upside. So expecting the stock to move towards the level of 720 as per the Fibonacci target. And one can maintain a stop loss for the stock at around 659 levels.
The levels coming in for Granules and a buy call coming in from Ashish. But let's talk about Thomas Cook in today's trade, because Thomas Cook India and SOTC have launched a customer self-service app, and this is to help customers get instant data and instant access to all the details about their trip on this app. So positive news coming in for Thomas Cook, and as of now actually locked up 5% in upper circuit Thomas Cook. And let's also understand a little bit more about this app that has been launched. This is being done to empower customers with a convenient and easy to access interface, making their post-booking experience simple. Customers can view all aspects of their book trips, have instant accessibility, travel documentation happens in one place. You also get real-time updates, and there's also an omni-channel advantage when it comes to this app. So well, on the back of this app that they have launched in collaboration with SOTC Travel, Thomas Cook as of now locked up in upper circuit 5%.
Okay, that is Thomas Cook. But let's move on, talk about Avenue Supermart. Subdued day of trade coming in, not much of an excitement. But yes, we do have a brokerage note that came in on Avenue Supermart from UBS, where they're maintaining a buy at a target price of 6,000 rupees per share. So yes, now they've picked up some bit of a gain that you're looking at it. It's up a % in trade. So yes, UBS, what they say that the channel check is suggesting that there's indicated a strong demand, strong footfall is what they're saying, with mid-teen sales growth versus in July and August 2023. There's an increase in terms of private label grocery as well as Minimax, that is relatively smaller stores with focus on grocery items, low share of apparel. DMart is seeing a good traction over there as well. So yes, strong traction is what they're seeing. And on the back of that, we're seeing UBS maintaining a buy, target price of 6,000 rupees per share. Avenue Supermart up almost a % in trade.
Alright, well, now it's time for an ET Now exclusive. A potentially largest ever private equity buyout of an Indian business has fizzled. For months, global private equity firm Blackstone-led consortium, Bain Capital and Temasek were circling around the proposal to acquire the combined food and snacks business of snack producer giant Haldiram Snacks. Now sources tell ET Now that the deal is on the verge of collapsing. Let's go across to Anurag Joshi, who's standing by to bring us more details about this deal. Anurag.
A proposal of the founders of Foods and Snacks giant Haldiram to sell a majority equity holding in the foods and snacks business of the group is on the verge of collapsing. Sources have told ET Now that the founders Agarwal family had been seeking to sell a majority equity holding in the foods and snacks business, and this company is Haldiram Snacks Food. Haldiram Snacks Food is the combined snacks and food business of the Delhi and Nagpur factions of the family, and the three contenders for the acquisition are a Bain-led consortium which include Abu Dhabi Investment Authority and GIC Singapore, Temasek and Bain Capital. The promoters were looking to sell the stake at a valuation for the company at $12 billion, while the investors were not willing to pay more than $8 to $8.5 billion of enterprise value for the business for picking up a controlling equity stake in the company. Now, obviously, the key reason is that there was a difference in perception about the valuation of the food and snacks business, but there were also lack of progress on the part of the founders, sources tell us, on the future steps to be taken to close the deal. The Haldiram Snacks promoters this year had also explored the idea of doing an IPO for the foods and snacks business, but there's no progress that has happened on that part. Last year, the Competition Commission of India had cleared the proposal of both the factions, the Delhi and the Nagpur factions, to clear to demerge the FMCG business, while the National Company Law Tribunal is yet to approve that proposal.
Okay, and with that, thank you so much for that, Anurag. But with that, we wind down this edition of Market Fatafat. So it's a goodbye from me, myself, as well as the team who put this show together. And thank you so much, Ashish, as well as Jinay, for joining in with us on the show.